Today we're looking at a huge company-defining bet made by one of South America's biggest banks, Grupo Financiero Galicia. They are going all in during what might be one of the most dramatic economic turnarounds we've seen in years. And for an investor, this is the ultimate high-wire act. It's a story of absolutely massive opportunity, but also, you guessed it, some very significant risk.
Okay, so first things first. Before we can even really dig into the company, you have to understand the incredible economic reversal that just went down in Argentina. The entire landscape for doing business there has been redrawn, and it happened almost overnight.
Just look at this number, 31.8%. That is the projected annual inflation for Argentina in September 2025. Now, to be clear, this isn't just a decrease. It is a stunning collapse from a peak of over 270%. We're not talking about a gradual cooling here. This was like breaking the back of hyperinflation. So you have to be asking, how on earth did they pull this off? Well, it was through a very aggressive program of economic shock therapy. The new administration made deep cuts to public spending. And here's the absolutely crucial part. This stopped the central bank from just printing money to cover the government's bills, which of course was the very engine driving that hyperinflation.
Now, that kind of shock therapy, it hurts. It caused a sharp and, frankly, an intentional recession in 2024. But the whole plan, which is supported by projections from the IMF and the World Bank, is for that short-term pain to lead to a really powerful V-shaped recovery. They're expecting strong GDP growth to kick in through 2025 and 2026.
You know, the biggest risk in a story like this is always politics, right? Could the whole thing just be reversed? Well, that risk got dramatically smaller after the October 2025 midterm elections. The results were widely seen as a huge public green light to keep the reforms going. For an investor, this was a massive deal. It fundamentally de-risked the entire macro story.
Okay, so what does this massive economic turnaround mean for the banks on the ground? Well, it means the entire rulebook has been thrown out. Their whole business model, literally everything they knew, has been turned completely on its head.
And it all comes down to this one key economic idea, crowding in. You see, for years, the government was borrowing so much money that banks really had no other choice but to lend to the state. But now, with the government actually running a surplus, it doesn't need to soak up all that cash anymore.
So the change is actually pretty simple, but it's incredibly profound. In the past, a bank's main job was just taking your deposits and lending them right back to the central bank. That's over now. They're being forced back in the traditional business of banking, lending money to people and to actual businesses. In fact, for the first time in 5 years, the banking system is now lending more to the private sector than to the public sector.
And here is the result. This isn't some theory, it's happening right now. As of March 2025, the amount of real, inflation-adjusted loans to private businesses and people just exploded, up nearly 89% year over year. A credit boom is officially underway. Which brings us to our protagonist, Grupo Financiero Galicia, or GGAL, as it's known. Now, seeing this new world coming, they didn't just get ready for it. No, they made an aggressive, all-in bet to completely dominate it. And their bet was enormous. GGAL went out and acquired the entire Argentine operation of the global banking giant HSBC. This wasn't some small deal. It was a truly transformative move designed to make them the undisputed #1 largest private financial institution in the entire country.
I mean, just look at how dominant they've become. After the acquisition, GGAL's pro forma market share of private sector loans jumped to 16.4%. That towers over its closest competitors. In a race to grab a piece of a rapidly growing pie, GGAL basically just bought itself the biggest slice.
But here's the thing, a move this big, this fast, it always comes with a price. Becoming the market leader literally overnight created a whole new set of massive challenges and immediate costs that investors now have to wrestle with.
So the natural question becomes, what was the immediate financial damage from swallowing a company as big as HSBC Argentina?
Well, here's part of the answer. A 70% drop. In the second quarter of 2025, which was the first full period reflecting the deal, GGAL's net income just plummeted by 70% compared to the year before. That is a massive hit to the bottom line.
So why did profits fall off a cliff? It's because of this incredible 192% surge in what banks call loan loss provisions. Essentially,
GGAL had to set aside a huge pile of cash to cover all the expected bad loans from the much riskier HSBC portfolio they just brought on board. You could say they were taking all their medicine at once. And right here, the challenge becomes crystal clear. GGAL's non-performing loan ratio, or NPL, jumped to 4.4%. That is more than double the rate of its main competitors. This, right here, is the core execution risk of the whole story. Can they actually clean up this loan book they just bought? So, all of this brings us to a very clear dilemma for any potential investor. You've got this huge, once-in-a-generation opportunity, but it's paired with some really big, near-term challenges. It really just boils down to this. The bull case is you get to own the unrivaled market leader in a recovering economy right at the beginning of a new credit boom. The bear case? The company is taking on a massive amount of execution risk with this deal, and honestly, the market has already priced in a lot of the good news.
And that suggests the easy money might have already been made. GAL's valuation, which we can measure by its stock price relative to its net assets, the price-to-book ratio, has already rocketed from a crisis level of 0.3 back in 2022 to around 1.8 more recently. The market is clearly not asleep at the wheel on this macro recovery.
So, if you're watching this story unfold, these are the signals that really matter. First, you need to see GIL's non-performing loan ratio stabilize and then start to fall. Next, you have to see its profitability, its return on equity, or ROE, recover from this current low point. And of course, you absolutely need to see continued strength in the broader Argentine economy.
Which leaves us with the final, critical question for any investor. The market has already given GGL a lot of credit for Argentina's turnaround. Now, the stock price really depends entirely on the company's own execution. So with so much good news already baked into the price, is GGL now priced for perfection?